Thank you, Arthur. It's a real honor for me to be here with you. We're proud to be the presenting sponsor of the conference. We have a unique interest in cities. It's not just in our name. They've been in our DNA for 200 years since we first opened our doors in Lower Manhattan as a trade finance bank. Our global footprint now includes 500 of the top cities in the world. If you're here, you know about the tremendous population and economic shifts impacting cities. Just tell you one of them. Top 100 cities in the world will generate 30% of global economic growth over the next 10 years. But when we talk about economic growth, we have to acknowledge it's not going to be automatically spread evenly like peanut butter. It's a competition, and those cities that position themselves for growth will emerge the strongest. There are factors that make cities competitive, such as the strength of its government institutions, planning capabilities, infrastructure, financial maturity, human capital, cultural institutions, and as I'm sure you'll hear from the police commissioner in a little bit, public safety. Based on my experience in New York City government, I think there are three things cities can do to come out on top. First, they have to steal. Cities are part of a network of ideas, and they should not be afraid to take ones from each other. For example, New York City is a world champion idea stealer. Despite how much credit my former boss gets for several legacy initiatives, each of them first started in other cities. In 2003, Mayor Bloomberg signed a law that banned smoking in bars and restaurants. After strong opposition at the time, the smoking ban is now celebrated as a public health success. And today, 500 cities around the world have enacted similar policies. But the first city in the US to ban smoking wasn't New York. It was Aspen, Colorado in 1985. Another problem he tackled was the frustrating experience people had as they thumbed through thousands of listings in the phone book trying to access city services. The solution, 311, wasn't launched in New York first. It was launched first in Baltimore 10 years earlier, and now 70 systems are in place around the world. First bike share example was in New York, it was Amsterdam, and it was only in the US 20 years ago in Portland. In addition to stealing good ideas, cities need to embrace risk-taking in order to innovate, and here's where the private sector can contribute. Public-private partnerships have accomplished many great things, but to me, the true value of private sector involvement is not measured in the amount of dollars. It's about having the flexibility and the freedom to try new ideas. In the private sector, risk-taking and innovation is expected by the public, but government is rarely a leader when it comes to experimentation. The scrutiny on tax dollars makes governments reluctant to take risks, except for him. This is not in the public's interest long term. Risk-taking by cities needs to be catalyzed, not constrained. I mentioned bike sharing a moment ago, and it's a great example of this. The Bloomberg administration did not want public money to pay for a bike share program because it was simply too controversial. Without resources from the private sector, in this case structured coincidentally through a sponsorship with Citigroup, the system simply would not have happened. 2 years later, it's the largest system in the country, generating 20 million trips covering 33 million miles. But sometimes big checks need to be written. There's a huge demand for infrastructure in the world's cities. It's been estimated at $60 trillion over the next 40 years. Here, the private sector, more specifically the financial sector, is critical to accessing the capital markets to make these projects happen. And at Citi, we're proud to have many city governments and local governments as clients. As I'm sure many of you who traveled here or New Yorkers will appreciate, we're part of a consortium that will finance the renovation of the central terminal of LaGuardia Airport. Somewhere Joe Biden is smiling. And you'll hear later today about how we partnered with others to turn the streetlights back on in Detroit after a municipal bankruptcy had put such a strain on city services that 40% of the lights did not work. We're also helping cities become more sustainable. In February, we announced a 10-year commitment to lend, invest, and facilitate $100 billion to finance sustainable growth to reduce the impacts of climate change. We raised $2 billion for the Central America's first commuter rail system, the Panama Metro. Each day, it eases traffic congestion by taking 16,000 people to work every hour. In the US, aside from being the leading lender for affordable housing, we're helping households become more efficient by providing low-cost loans for energy improvements, such as installing more efficient boilers and smart thermostats. Our City for Cities initiative draws upon all our resources to provide solutions that help cities to solve their problems. And the examples I shared with you are not philanthropy. They're part of our business model, It's what we do as a global bank. And frankly, much of these activities can only be done by global banks, which are scaled to serve the diverse needs of their clients, whether they're multinational corporations, cities, or other institutions. A fact which some of our critics look past, but that's probably a different conference. Obviously, we can't solve these urban challenges alone, and that's why this conference is so important. Together, we can help cities manage the challenges presented by unprecedented growth and improve the quality of the lives of their citizens. Thanks again for the opportunity to work with you, and I hope you enjoy the conference.